The other thing is you got to know the numbers. I mean, it's really important to know your numbers. In a great real estate market where you're able to buy homes really cheap and sell them really high, so you got that real advantage, you got that real swing. It's easy to be lazy with the numbers and still make money. You can do things that probably aren't the smartest and you can still make money. You can over leverage yourself. You can, spend too much cash. You can pay too much for materials. You can pay too much for labor and you're still okay. But when you get into a risky real estate market, you really have to kind of tighten your belt and know the numbers. You got to know what your costs are. You got to know where you're going to be, not only with your acquisition, but what your real ARV is going to be. What are you looking at on an ARV? Your after repaired value may have been, 650,000 in a good real estate market, but it may only be 610 in a risky real estate market, and something where things are a little bit more tumultuous. And so you really want to know your numbers, which means you got to do your research. I know that it's tough sometimes for us because we're going so hard and going so fast, especially when you got multiple projects. But either you have to do it or you have to have somebody who can do the research. Find out what the trends are in the neighborhoods where the properties are you're looking at. What are the rental trends? Is the rental market strong or weak? Is commercial softening or is commercial strength? You really have to do your research. And sometimes it requires spending a little bit more money on doing research and on applications that will help you do better research. How many times have I heard somebody say, well, no, I didn't do that because it cost a couple $100 a month more, and yet they're losing 10,000, 15,000. I remember one time that when the foreclosure stuff was going on here many years ago, I had one of my investors who's flipped a lot of houses, decided that he was getting really good at this, so he was going to go down and buy a property at the foreclosure market. And he did not do the research. And so he calls me and goes, hey, I just acquired 123 Any Street. He says, here's how much I'm in it. Run the numbers on it. I think this is how much it's going to cost to rehab it. And he basically paid retail for the property at the foreclosure auction because he didn't do the research up front. When you get into risky markets, most people can only take a few of those before it starts to become pretty painful financially. So in a risky real estate market, we got to know our numbers. We got to do our research.